Welcome back to my channel, my little altcoin lovers. Today we are diving into the key rules for building a solid crypto investment portfolio. What to focus on, how to diversify properly, and common mistakes beginners make. To make things clear, I have put together 3 types of portfolios as examples. And of course, as always, we will do a quick market update to see what's going on right now. Don't forget to subscribe to my YouTube channel, leave your comments below. Of course, don't forget to subscribe to my Telegram account to receive the latest notifications about market and my newest videos. And of course, subscribe to my X account. So let's not waste any time, let's dive straight in. Alright, let's start as always with the Bitcoin market update on 4-hour time frame. What's happening with the Bitcoin and what went down over the weekend? As I mentioned in my posts on X and Telegram on Friday, here you can see, I wasn't expecting any major moves over the weekend. Instead, I anticipated some stagnation and range-bound movement, which is exactly what we got right now. You can see on the chart the green scenario I outlined on Friday played out almost perfectly. Over the weekend, Bitcoin was moving sideways for quite some time until Sunday morning, when we saw a sharp drop in a single candle. However, it found strong support at the ETH, so inversion fair value gap, from which buyers stepped in aggressively, pushing the price back up to the lower boundary of the bearish imbalance you can see on the chart. The first bearish imbalance has already been traded through and no longer impacts price action, so it can be removed. But the second imbalance is still significant. It has already acted as a resistance twice, so here, one, and second time here. After dropping back to the FVG zone, buyers once again reacted positively, and right now Bitcoin is stuck between these two levels. At this point, the entire market is waiting for the Fed's rate decision on March 19. Investors aren't expecting a rate cut in March. Most anticipate it happening in June instead. Because of this, markets are in a state of uncertainty, but since a no rate cut decision is already priced in, I don't expect a negative market reaction when the Fed confirms it. As I said, nothing new for Bitcoin. We're still waiting for a break above the 48.5k level and this bearish imbalance. We need to see a strong breakout with a clean retest before pushing toward the next key resistance in the 91-92k zone, this bearish order block that you can see on my chart. For support, you can see the bullish imbalance on the chart, this bullish imbalance, which aligns with the bullish order block. And also we have an inversion FVG here. So already this FVG provided us 2 solid reactions, buyer's reactions from its higher boundary. The final key support level sits around 76k. So a strong order block that previously triggered a bullish reaction at this point that we had here. So regarding to Bitcoin dominance, nothing has changed. We are still in the wide ranging consolidation, as you can see, with altcoins slightly gaining as Bitcoin moves up, but overall nothing major has happened, just a sideways market. Ethereum is in the same situation. So for Ethereum, what we have here, for over a week, as you can see, it has been stuck in a tight range, showing no clear direction. The main resistance right now is a bearish imbalance that's preventing an upward breakout. To move higher, Ethereum must break above the 2k level, so which is both a psychological level and the technical resistance. If we clear this level, retest it, for example, and break the recent high, this high, so the high we have here on a $2,150 level, we will confirm a bullish market structure shift. So change of character, the bullish change of character. This could push Ethereum toward 205 to 206k and beyond. But for now, the market remains in wait and see mode ahead of the Fed rate decision. Until then, we might not see much movement. Now we will tell about the key principles of building a crypto portfolio. So the first principle is diversification. So don't put all your money into a single asset. Spread your investments across different types of cryptocurrencies to reduce risk. The second is understand your risk tolerance. Higher potential rewards come with greater risk. Choose a strategy that aligns with your financial goals and risk appetite. The third balance between large cap and small cap coins. Large cap cryptocurrencies like Bitcoin and Ethereum provide stability, while smaller projects offer growth potential. The fourth rule: keep up with market trends. Stay informed about major developments, news, and trends in the crypto industry to make informed decisions. Use a portfolio tracking tool. Regularly monitor your investments using platforms like Dropstep to track your performance. So to stay ahead about your portfolio right now. Rebalance when necessary. Adjust your holdings based on market conditions and the performance of individual assets. For example, if one asset from your portfolio already gave you 2-3x, you can sell it and buy something that didn't grow yet. And the last rule, it's anti-retail logic. Don't buy when everybody is buying and don't sell when everybody is selling. So track the market, track the sentiment. So make your own sentiment analysis to understand the mood of retail players, of everybody in this market. And when everybody is selling, you need to buy. When everybody is buying, of course, you need to sell. This is how it works, how the big guys are working, how the big funds are buying and selling their coins. So these are the main 7 rules you need to understand and to learn to build your crypto portfolio and be safe. So let's move on the most interesting part of this video. I will show you 3 portfolios that I have compiled myself. These portfolios are divided by risk level. The first portfolio is a conservative portfolio, which will inevitably grow, will not drop as much as the others, and will be more resistant to market downturns. However, it also won't grow as fast as riskier portfolios. But in return, it is much safer. As you can see, all portfolios are based on an initial investment of $100. This makes it easier to illustrate the percentage allocation of each asset, so we can better understand the distribution. Let's imagine we are dealing with 100% allocation instead of $100. What do we have here? Naturally, the first asset in this portfolio is Bitcoin. Bitcoin makes up, as you can see here, 30% of total portfolio. This ensures a certain level of stability as Bitcoin doesn't drop as sharply as altcoins. For example, if Bitcoin drops by 10%, some altcoins might fall by 30 or 40 even percent. This is why Bitcoin holds the largest share in this conservative portfolio. It is the flagship of the market, the digital gold. The second position of the portfolio is, of course, Ethereum. 20% of the portfolio is allocated to Ethereum. I don't think I need to explain much here. It is the leading smart contract blockchain, the number 1 altcoin, the king of altcoins. So naturally, it belongs in this portfolio. So Dogecoin takes 10% of the portfolio. Dogecoin is the top meme coin in the industry. As we know, meme coins are still trending, and considering the current political situation with Elon Musk's support for Dogecoin, I believe Doge will show good growth in this bull market. Chainlink is an oracle that connects blockchains with the real world. It's one of the older, most established altcoins and is ranked on 12th place in market capitalization. On-chain analysis shows that whales and institutional players have been accumulating Chainlink in recent months. Avalanche, AVAX, 10%, a fast blockchain that competes with Ethereum. So it ranks on 9th place by market capitalization and was once valued at $127 in 2021. Its market cap peaked at $30 billion, but currently it's only $7 billion. This suggests that AVAX has strong potential for a comeback. Litecoin, 10%. Litecoin is an alternative to Bitcoin with faster transactions, in simple words. Institutional investors, especially in the US, have been accumulating Litecoin in recent months. Additionally, ETFs have been proposed for all the assets in this portfolio, meaning they may soon be officially available for traditional investors through the US stock market. And finally, we got Aptos. So Aptos is a new blockchain created by former Facebook developers. It launched in 2023, meaning it has not yet experienced a full bull run. Its market cap is currently $3 billion, making it a relatively small cap asset compared to the others. It is the riskiest token in this portfolio, but I wouldn't even call this portfolio risky. It's a calm, stable investment strategy that could easily provide 5x return, potentially even more, on this bull market. Now, let's move on to the balanced portfolio. What assets do we have here? The first token in this portfolio is ApeCoin, so 15% of our portfolio. ApeCoin is tied to the Bored Ape Yacht Club NFT ecosystem, connecting gaming and NFTs. When it launched in 2022, it reached a market cap of $6 billion, even in a bear market. Right now, its market cap is only $400 million, and it has solid investors backing it, so as we can see here. So 134 rank by market cap, not bad. Like, we have a market cap of, as I said before, $400 million, so good. The next project we have here is so Sonic Labs, formerly Phantom. 50%. This is a layer 1 blockchain associated with Ethereum, so it's heavily accumulated by whales and it consistently performs well during market upswings. The third asset in our balanced portfolio is Celestia, TIA. So 15%, another 15% of our portfolio are in TIA, a modular blockchain for scalable applications. Its market cap of $1.8 billion, ranked 51st place overall. It has extremely strong investors and holds up, so as you can see, really good, really strong investors. And this coin holds up very well during market dips, making it a solid investment. So the next coin in our balanced portfolio is SEI. What is SEI? This is a blockchain that designed for high-speed trading and supports NFT marketplaces, GameFi, and decentralized exchange. Currently, on the market cap, ranked 73rd with a $1,972 million of market cap. SEI is a very strong fundamental coin. Even Trump's World Liberty Financial Company is buying SEI right now by on-chain analysis. The next asset is Wormhole. So W, 10% of our portfolio. This is a cross-chain protocol that connects different blockchains. It has a market cap of $260 million only, and was launched only recently in April 2024. Despite its high fully diluted valuation of $900 million, Wormhole is a fundamental asset with a huge growth potential. We also have Blur. So what is Blur? We have 10% of our portfolio in this asset. Blur is an NFT marketplace competing with OpenSea. It was launched in 2023, once had a market cap of $1 billion, and is now sitting at $200 million. I have tested the platform myself, and it's a great product with a strong investors backing here, as you can see. So the next asset is Floki. 10% of our portfolio is in Floki Inno. I added this as the only meme coin in this portfolio. Even though I personally don't take meme coins seriously, we cannot ignore that meme coins are a strong narrative in the current market. Floki has a market cap of $600 million, but its peak was at $3 billion, showing it has a room to grow. And as I said, the meme coins are one of the main narrative of this bull market. The last asset we have here is PIF Network, another 10% of our portfolio. The PIF network is a decentralized Oracle network similar to Chainlink, but with a smaller market cap. We have a $500 million of market cap. It provides critical blockchain services and has a strong adoption potential. Also, we have a great investors here, also traded on Binance and all top-tier centralized exchanges, so a good investment. So this balanced portfolio could realistically provide 10x returns, possibly more, even more. Considering we are at the bottom of the market cycle, these assets don't need to grow excessively to reach those targets. Simply returning to their previous all-time highs from last year, 2024, February, March levels would be enough for 10x return from current prices. So the last high-risk portfolio that I want to show you will be posted in my Telegram channel tonight. I want you to check out my Telegram channel and see the super high risk portfolio. This is not a financial advice. This is just a portfolio with a very high volatility, consisting of small cap assets, but carefully selected. I have personally conducted deep analysis on all these assets, and I will publish this portfolio tonight in my Telegram channel, so if you are interested, make sure to check it out. I expect this portfolio to deliver around 30x returns at the peak of this bull market, and that's absolutely realistic. Tonight, when I post in Telegram, you will understand why, what assets it consists of, and so on. The best portfolio, in fact, depends on your investment goals, risk tolerance, and market outlook. If you are comfortable with a high volatility, the high risk portfolio might suit you. If you want a mix of stability and growth, go for the balanced portfolio. If you prefer long-term security, the conservative portfolio, of course. That's it. Thank you for watching. I hope you found this video useful. Don't forget to subscribe to my Telegram channel, and if it's more convenient for you, follow me on X as well. And of course, subscribe to my YouTube channel to get notifications about my newest videos and not miss any updates and interesting topics. Let me know in the comments which portfolio strategy you prefer and why. Thanks you for watching, and see you next time.